I ain't gonna tell y'all how many times I started this video over. But man, let's get right to it, man. Welcome to Skipper Weekly. We're gonna talk about the market. We're gonna talk about the economy. We're gonna talk about what it means for you. Hopefully my computer don't die because the battery down right now. But we rocking out, bro. I'm trying to go ahead and get this information to y'all. We're gonna take a look at the news, man. What's been happening the week September 6th. Last week, man, the big news was the jobs data. Only 22,000 jobs were added. 75,000 was expected. Healthcare and social assistance were the two bright spots. You know, healthcare added 31,000, social assistance added 16,000. So I mean, if you're helping people, yeah, it's a market for you right now. If you work for the government, it's no market for you right now. Government jobs down 15,000, man. It ain't funny, man, but it's tough, man. As Trump said he was gonna do it, you know, I guess he's keeping his word, being the man of his word. That's 100,000 jobs lost since January for the federal government employees. Manufacturing is down 12,000. Wholesale trade down 12,000. You know, maybe it's the delayed effect with the tariffs. So hopefully those numbers will come back up. Economists don't think so, but I mean, you know, like I said, man, it's really a strong administration, man. So either they geniuses or they idiots. I guess we're gonna find out. Unemployment ticked up 4.3 from 4.2 to 4.3. So not a large uptick in unemployment. Not a lot of jobs being lost, man, but not a lot of jobs being gained either. So kind of like a stall in the job market right now. It's tough for people, man. It's tough. So with that being said, when we look at Fed Fund futures, the market is expecting the 89% chance of a quarter basis point cut. There's even some people that think we're going to get a half a point cut. But basically it's being priced in already. And that's really affecting mortgage rates right now, which hits an 11-month low. The average 30-year fixed rate is at 6.5%. I think most people are really trying to wait for it to get under 6%. And if there's a rate cut, and I mean how it's looking, it may be 2 or 3 rate cuts by the end of the year. We might be able to get to that under 6% rate for a 30-year mortgage. And, you know, let's talk about that for a second. So the mortgage rates are not just kind of made up. They're based off the 10-year treasury yield. Because at the end of the day, you know, mortgages is debt. Somebody's lending you money, so they're basing it off other debt, which is government debt. But, you know, we're not going to go too deep into a rabbit hole. But let's just know that it's based off the 10-year treasury yield. 30-year mortgage, 10-year treasury yields. Most people refinance after 10 years or pay it off. So that's kind of how they do it. So when those treasury yield rates drop, the mortgage rates, you know, slowly kind of follow after. And I mean, if you're in the market of buying a home, or if you bought a home, you know, you understand that, you know, that 1% difference in the rate could mean, you know, $300, $400 a month that you'll be saving, or that you'll be spending in addition to on your mortgage. So it really gets down, those rates are really important for affordability. And, you know, when we looking at the housing market, you know, the biggest thing is affordability, number one, and then number two is supply. So lower rates could mean more affordability and also more supply, because it'd be cheaper to borrow. So builders be able to kind of build more housing. You know, at least in theory. I mean, it's so many factors that go into it. The economy is a complicated thing, but that's why we're here, man, to kind of take a look at it and break it down and see what we can make of all of it. We got CPI coming out on Tuesday. PPI coming out on Wednesday. Jobless claims are coming out on Thursday, which is going to be, you know, I'm definitely going to be keeping an eye on that one, especially after those job numbers. You know, we really try to get some real-time data if we can about the job market. Other things that's coming this week: Oracle, Adobe, and GameStop. They're all going to report earnings, which is going to give us, you know, a look at enterprise tech, AI adoption and retail investors sentiment. We'll be able to kind of see what's going on all across the board. Yeah, man. I mean, that's pretty much it, man. The S&P was up. The Dow was up modestly. Russell 2000, the small caps are showing some resiliency. Looks like there's a little bit of sector rotation going on. People are kind of getting out of tech right now. Financials and industrials with a pending rate cut. Those are going to be the sectors to really look at that, that are going to benefit the most. Yeah, I mean, Robinhood. I did want to talk about Robinhood. Robinhood's going to be part of the S&P 500. I seen that. And, from them to go from a disruptor app to kind of being one of the 500 companies in America, that's pretty big. So congratulations to them. I mean, I think that's pretty much it, man. We talked about the mortgage rates. Talked about the Fed's cutting interest rates. We talked about what's coming up this week. Got a little bit of a recap of the market. Talked about those job numbers. Yeah, man, I think that's it, man. Like I said, we're just gonna keep an eye out on a couple of things this week, and it's the news, so it's always gonna be something new. So y'all enjoy yourself, man. Do your thing this week. Keep making that money. Keep putting it away, man. Put yourself in a good position to capitalize on a lot of these events that's happening out here. So until next time.